Hello everybody, my name is Thor Young, I'm a moderator at Bear Bull Traders, and I am going to be doing a recap for you this evening. My recap I'm going to be doing for you is going to be on Roku, and I want to specifically highlight a strategy that I've added to my playbook that has been helping me a lot during these more turbulent market times. It's really hard to find a good continuation these days, but finding a good reversal, they are a plenty. So diversifying your toolkit and being able to play reversals better in a choppier time like this, or even in a sell-off period, can be very, very handy. Now, if you're a person who doesn't like opening ranges and playing the earlier trades, these kind of trades can be very, very helpful. Now, the specifics that I'm going to go into now are going to be basically on what's called the Pearson pop or the Pearson fail. All right, now what this basically uses is a price level failure strategy. So quite often I've talked about a price level breakout strategy. So those are like ascending triangles and high of day breakouts. Those all utilize a specific price level, and we are going to play the breakout of those prices. But what do you do when they fail? Now, in today's market, those failures can be very powerful and can be very fun to play and utilize. So I'm going to show you here in Roku. I actually use that in both directions on this stock. It was pretty much the only stock I traded today. I tried a couple of other tickers here and there, but Roku is what I really got the good action on. So first off, if you can notice on Roku, I'm actually going to go over to a daily. The one thing I really liked about Roku, and playing Roku is not a normal thing for me. I rarely play this stock actually, but in this instance I was very excited about it. Why? Look at the volume yesterday. We had a big breakout, nice volume breakout, some good news. Roku's doing well. And then we had today, I was looking for a continuation off of that. And you can see my bottom long here is a really nice one actually. So let's get into the 1 minute. And we'll get back to where we started. All right, so Roku, unfortunately, I was not watching it this morning at all. So I had it on my list, but I got a little preoccupied watching some of the other tickers and was trying to kind of get into a little bit better position on those and to see if I could figure something out, but nothing really jumped out to me until someone said Roku's really running, and when I looked back, Roku was already in the middle of this guy right here. Unfortunately for me, once a stock's made a breakout with that much volume and that much distance, it's just really hard to really look for a solid continuation play. So once you've had that happen, you're really going to have to wait a while, and I'm talking hours normally to really get a solid long after that, because what you're going to need to do is pivot and then break the pivot or hold a lower pivot in order to do that, and I'll show you exactly what that was here in a second. So my first trades, though, are going to be Pearson fails. So as you can notice here, Roku was starting to push up here, and it actually broke through this higher pivot here. And when it broke through, you can see we've got this level that kind of comes across right there. So what I'm watching is what is it going to do when it goes to this level. This time it goes through the level, it breaks it, and it fails. And then it comes down. This time it goes through, it breaks it. And when it breaks it, it immediately starts to fail again. So I go short here with a stop loss only above my candle. This provides a very tight RVR. So even with only $25 worth of risk or $50 worth of risk, you can get a whole bunch of shares. And you're not really risking a whole lot of money. I got a solid 3-to-1 here and then a 4-to-1 there. So already up, a couple $100 by the time I get there. And then I gave a little bit back on slippage, unfortunately, with this. Roku was not happy with me getting money from it, and it threw this high volume spike as it came up here and obliterated the level 2. Literally in 1 second, this thing screamed 50 or 60 cents and just knocked out the whole level 2. Now, of course, as soon as it did that and it came back down underneath my level I had marked here, I shorted it again. And once again, got some really great partials all the way down, and avenged this wick out that they did on me. That was ever so not nice. So once I'm done with that, I've had the shorts. I now got stopped out. I'm not really feeling as short anymore. So now I just kind of have to wait on Roku. And I went ahead and took a little time off. I went and got lunch, and then I came down and I sat down around 12:30. And I was looking to see if it had done anything, and then it was beautiful. It was really looking at me. So first thing is just to make sure, I wanted you guys to know how to identify pivots. So a pivot generically consists of a large, to the top side, a large bullish candle, then an indecision candle, and then a bearish candle. And normally volume is going on around there. So we can see here we had the big volume as we moved up, and then we get our pivot right here. So you see we have our big move up, indecision, and then a big move down. So this really sets the top of our range very nicely. So now what we're going to do is we want to wait for it to come down and set a lower pivot as well, and it's going to identify the trading range that the stock's going to be in for most of the rest of the day. So as it comes down here, you can see we sell off, we get some indecision, and then we push back up. So we get a nice little pivot right off of these daily levels here. So now we're looking, you know, pretty good, and we've basically identified what our range is on Roku. So I shorted at the break of that range, right, the Pearson fail, and then what I'm going to do is I'm going to long off of it here in just a second as well. Let me show you that. So now that we know that pre-market high here, which is a very significant level, and we have this previous daily level are going to come into play, that's what I'm watching. So I sit down, like I said, around 12:15 or so, and I noticed it came through here, respected pre-market high ever so nicely, and then popped right back up. We had some good volume before it, so I was pretty interested. So I just wanted to see how it was going to do, and it came up here, faded off the 50, and came all the way right back down. And then what did it do? A lot of people, I know our buddy Eamon calls them tweezers. I call them the Pearson pop, but basically bottoming tails. There's lots of different terminologies for these, but what you can see here is every time it came through pre-market, it pierced through and popped right back up. Came through pre-market high, pierced, popped right back up. Each new 1 minute candle sold up, came down, pierced, popped up. Right, so once it honored this 1, 2, and 3 times, made this new high right here, I went ahead and went long, stop out, loss of the candles, pretty easy one there. And then it came down, gave me a little low volume test, which wasn't too concerning, consolidated, and then broke up on great big igniting volume. And I got a good partial, 2, 3, 4 to 1. Right, held on to that, got another partial here. And then I did a nice big add right here, and I'll show you how I wound out this position. Now, sometimes entries are good, and I got a really good entry on this one. I really enjoy the way I managed it. And this is a lot of things. Once you get a good one that's trending in your direction, you got to stick with it and manage it. So you can see here, we got here, I'm in here, pop, pop, pop. I added here, and then I just held, right? We consolidated here for a little while, just held, and then boom, big pop up on big volume. That's our partial. So I took a partial there on the big pop. Once it stalled, it came right back down to the 100 SMA bounce there. So I added in one more time, and then I let it ride up until it looked like it was basically not going anywhere else. And then I took the last of my position off right there. So total risk on any given trade on Roku today was less than $100, and I ended up the day at about $500 or $600 on Roku overall. That I didn't trade very many shares. I mean, I probably traded maybe 1,000 shares in and out by the time I was done. So my commissions are going to be about $15. So on, 15, 20 bucks. So on $500 to $600, $15, $20 worth of commissions, and a relatively uneventful day for me on what's otherwise a very eventful market. So I wanted to kind of show you all that so you can kind of take a look at and see how these things come. And I'm sorry my recaps are coming in so late. Unfortunately, with the way the market is right now, I'm trading a lot later in the day. So a lot of my recaps I'm really not ready to do a recap till after the market closes, and then I got family and stuff, so I got to get that situated before I can do this. But I wanted to make sure I ran in and gave you a nice coverage on this one. I hope you guys can take a look at it, and really if you take nothing from this recap but anything else, is to look at the levels, look at the pivots, and then just have patience and wait for the stock to come back to them and go. Trying to anticipate things in today's market is a good way to give out money. So rather than anticipate, wait for the move to happen. Once the move happens, go with that move, right? And the Pearson pop or the Pearson fail can really help you get into that. So I hope everyone had a great trading day and has a great rest of the week, and I'll talk to you all later. As always, keep it green.